Make money buying a car. Did you know that there is a way you can make money whenever you buy a car? Education is super expensive, but it's one of those things that can't be ignored in order to make money. And the study of infinite banking concept will get you there faster than anything else that I came across during my 30-year-long career in banking and insurance. Hi, I'm Sunny Mitra, founder of Bright Horizon Wealth. We teach entrepreneurs and go-getters like you how to own their financial future with the concept of infinite banking. If you are new here, please subscribe to our YouTube channel and hit the notifications bell so that you are notified when we upload new videos. Do you want to know how you can make money from everything that you buy, like a car, for example? We are going to teach you how you can make money at a lower interest rate than you pay and still make money. This is the third video in Make Money series. Let's pretend that you have been saving money for a while now and you have $30,000 in the bank. And today is the day you are going to go to the bank, take out that money, go to the auto dealership and get your dream car by paying hard cash. From today, the car will be yours free and clear. At the bank, the manager comes and tells you, I have a better deal for you. Instead of taking the $30,000 out, why don't you leave it here and let it keep on making the 4% compound interest that it has right now without any interruption, because if you take this money out, you will have to start saving all over again, and in the meanwhile you will also lose all the interest that it has made so far. Instead, how about if I give you a loan for $30,000 at 4.5% interest for 60 months using your savings account as a collateral? So if you default on the loan, we'll just collect from your savings account. And guess what? Because you did not touch your savings account, at the end of 60 months, you will have more money in your savings account than you have paid back your loan in principal and interest. The name of the game is not to touch that savings account and let it continue to earn that uninterrupted compounding interest. And you get a loan instead for $30,000 at 4.5% for 60 months or 5 years. And in that time, your savings account is going to earn more money than what you would have paid back the bank in principal and interest. So what do you think? Do you believe me? I know when I first saw this example, I said absolutely not, Sunny. It doesn't make sense. Because if I'm making 4% on my savings and paying 4.5% on my loan, how can I still be ahead of the game? It doesn't make sense. If you are thinking like that, we are on the same page. I'm going to show you how this is possible. Let's pretend that you go through with the deal. You say, you know what, Sunny, I trust you. Let's move forward because I want to make some more money. We do the deal, you sign the paperwork, and now your monthly payment is $559.29 a month. We're going to calculate that over here for you so you see how much principal and interest you pay. $559.29 for 60 months is $33,557.40. What that means is you're paying an additional $3,557.40 in interest as the calculator is showing. But remember, I told you that if you don't touch your savings account, you'd earn more money than what you paid me in principal and interest. So in order for me to be correct, this number, when I calculate it, has to be greater than $33,557. When I apply the time frame to the calculator here, 30,000 at the rate of 4% for 60 months, we get $36,499. And I think you would agree with me that 36,000 is greater than 33,000. The question is, how does this work? Let's show you how it happened. If you look at the loan and ask what is the characteristic of a loan, it's a decreasing balance. What do I mean by that? Every month that you are paying $559, your principal amount is going down. The longer you pay, the smaller your balance will get. But what is the characteristic of your savings account? It is an increasing balance. Your savings account is growing because it's making 4% compounding interest. And because the amount is increasing, you are earning interest on the larger balance, and this is exactly how you are able to earn more money at a lower interest rate than you pay, because the loan is a decreasing balance. And you know what? I could even change the numbers. I could say you are earning 4% and you pay the bank 6%, and you still end up on top. But the problem is that we never take the time to do the math. We just look at the interest rate and let them either overwhelm us or determine what our financial decision is going to be without doing the math. The one thing that I didn't even touch on is that not only do you still have $36,000 in your possession, but you are still driving the car. How crazy is that? Is that not eye-opening? How many times would you like to do this transaction? Again, just to recap, I showed you how you can make money at a lower interest rate than you pay. If you are earning 4% and paid 4.5%, you still made money because you made $36,499, but you paid $33,557 to the bank, which is a difference of $2,944.19. Now, one word of caution: you want to deal only with a mutual life insurance company which has a non-direct recognition policy, because if it does not have a non-direct recognition whole life policy, you do not have a true infinite banking. So again, remember, regardless if you have any debts now or you are planning for your retirement income, we can help you create a plan where you can pay for it in the future. Above all, what makes us different from the rest of the crowd is our agency has 70 years of combined experience in insurance and finances, which a very few can boast of. And we direct you towards the right direction by uncovering your main reason as to why you should even consider to get started with infinite banking. We'll provide you a real roadmap for your financial future. And if you're thinking about using your policy to finance other things, we have a free book called Infinite Banking Secrets, where we share different ideas on how you can utilize your whole life insurance policy. So definitely check out the link below and visit our masterclass. If you like this video, let us know by liking it and leaving a comment for us. Make sure you share it with your friends and family and subscribe to our channel. It was the third video today in our Make Money series. Next week, you will have the fourth video in the series called Make Money by Saving a Penny. And remember to own your tomorrow by converting liabilities into assets.